Welcome to the Pirate Investor. Hi, pirates. It is April 2024. Time to check the state of the economy. Should we invest in stocks now? We're looking for the next good moment to invest our treasure. And when we say good, we mean good. We mean the price is low, and the interest rate is low too. But why is that a good moment? And how does the economy look now? Let's look at our graph and find out. First, let's answer why a low price and a low interest make a good moment to invest. It is not that you should only invest in these moments. It is just that they historically offered low risk and high potential benefits. So you probably want to invest more by then, if you can. This graph shows data from 2003 till today. The black line represents the price of the world's biggest companies. The blue area represents the US interest rate, and the gray bars, the crises. As you can see in the graph, the economy tends to move in cycles. The price goes up, and so does the interest rate. Then, something happens, and the price goes down. If what happens is bad enough, like the housing crisis in 2008, the interest goes down, and soon, the price starts to recover. The cycle repeats during COVID, in 2020. So, when the price and interest are down, we see a good moment to invest. This is not any secret that the pirate investor is trying to uncover. It is just how economy works. When we enter a crisis, authorities, like central banks and governments, help to fix the economy, mainly lowering the interest rates. They always do this to benefit society. It is their job. They have enough power to achieve their goal and turn things around. They make the price rise again. As we will show in other videos, they have managed to do it in the last 70 years. Our bet is that they will also manage to do it in the next crisis. But there is a very important detail. Not all the economies have the same power. The lead economy, the United States, can fix its own local economy, and also, as we see in the graph, the global economy. Because the US alone represents a big chunk of the global economy. Smaller economies, like Japan, sometimes need more than 2 decades to fix their local economy, and their biggest companies. That's why we focus on the US interest rates, and the global economy. That is, the world's largest companies, most of which, not surprisingly, are based in the United States. But how big is the US economy compared to others? Let's analyze the biggest economies in the world, in our world map. Prepare to see the wealth of nations. As you can see in this map, according to the latest absolute GDP data, in dollars, available in the World Bank website, the world produced, in total, $101 trillion. Of that amount, 25 trillion were produced by the US alone, making it the largest economy. Followed by China, with 17 trillion, and Europe, with 14 trillion. But, is China quickly approaching the US? Is it challenging its leading position? Let's see the evolution graph. Here we can see data from 1998 until 2022. The US appears in dark blue, Europe in light blue, and China in red. There is no doubt China is growing. It indeed surpassed Europe by 2018. However, it is still relatively far from the US, and their growing phase is not as quick as it was some years ago. So, we don't think China will surpass the US soon. However, we will be vigilant. Every year around July timeframe, new data is published, and the pirate investor will inform about the new situation. Subscribe to our YouTube channel if you don't want to miss any detail. If you want to know more about how the US became the world power, It is explained in The Changing World Order video by Ray Dalio. Currently, the US is the leading economy, and it has been for almost a century, representing from 25 to 30% of the global economy. And with the power that leading position gives, it has been capable of fixing every crisis, and making the price of stocks go higher. Important note, we mean the average price of stocks, of the biggest companies. Some companies go bankrupt during crises, like Lehman Brothers in 2008, or just fail at some point, like Kodak in 2012. That's why diversification is important. In our graph, we show the price of a known index, that includes hundreds of companies from around the world. The MSCI World Index. So far, since its creation in 1969, its price has always gone higher after every crisis. Okay, we answered why when price and interest are low is a good moment to invest, and why we focus on the US interest rate. Now, let's answer if now is a good moment to invest in stocks. Today, the price of the MSCI World Index, that is, the average price of the world's biggest companies, is higher than ever before. And the US interest rate is high as well, 5.5%. For pirates, the higher the interest rate, the higher the waves. It looks like last month. High waves, and more high waves.
Avast!
This might not be a bad moment to invest, but it is not the treasure we are looking for.
Oh, I don't think so, me matey.
According to our map, we remain in this position. So we will keep sailing. We will check again, next month. See you in the next episode.